Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, this is the third part of this ongoing series involving the indicators, the tricks, and LRA. And here, the tricks is a fairly simple indicator. This is simply the rate of change of triple exponential moving average, which we are trying to use as a momentum indicator. This is basically an oscillator which can also give us an idea of overbought or oversold situation. But we are working with it as a momentum indicator to determine the trend, and then the LRA, the linear regression angle. We are utilizing it for the entry and the exit purpose. We are trying to figure out the exact reversal of the trend, and when the situation has shown some retracement and then the resumption of the trend, that's where the LRA comes into picture, and we are utilizing to initiate the fresh trade. Before we get started for our setup, this is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs and also allow it to run on the demo account for good enough time to get a clear cut idea of the efficacy of the algorithms developed here. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we get started for the day. So here we were almost closer to wrapping up our buy side of the trade. In the buy side, we are looking for the TRIX indicator values, and those values should be on rise. It doesn't matter if they are rising from the negative territory or positive territory. We are not concerned with the absolute values. We basically want to see the momentum, and if it is on rise, we are looking for a buy trade. If it is falling, now that it has entered into a falling side, here you can compare the current value of the tricks is lower than the prior values. So we will be basically looking at this indicator as a momentum indicator, and then comes the linear regression angle. Here, when the tricks values were rising, we would have looked at this linear regression angle, and we need it to be in negative territory. Here it is in positive territory only, so no buy trade will happen. And here it had entered into a negative territory, then it again started to rise. At that point in time, order would have been placed. So there is the difference between our setup and the difference because of the magnitude of the LRA, the linear regression angle. Now let us go back on the Visual JFRX platform where we have developed this setup. We have done an instrument subscription, then we got in the TRIX blocks with hourly time frame with shift 1 and shift 4. These are look back periods, and we will be comparing the values there. Then we got this linear regression angle, and here this will help us guide whether the reversal is happening after some sort of retracement in the underlying instrument. Then we got the min max conditions, min max values of the 6 hours 10-minute candle each for 36 time period, and that works out 360 minutes, so it is 6 hours in all. Then we did this calculation to determine the exact buy entry price. Today we will need to do the calculation for determining the sale entry price, and then we got these historical candles of 10 seconds and 1 hour each for determining the precise entry point. Then we have put in the conditions for the buy trade. We have done it to some extent. We have put in this condition for comparing the TRIX values, and then these LRA values, the linear regression angles values, and here we have defined this condition as well. Now is the time to give this buy side the final touches, And after defining the tricks and LRA requirement, the only thing that remains is to figure out the precise entry point. And for that, we will be looking at the last hour's candle close, and then as and when the value starts to rise above that, we will be placing a pending order which will be placed at the distance of half the difference between last tick price and the minima of last 6 hours. So we have done the calculation and then we define that point, and we will need to deduct this half value of this difference from the last tick price, and then the order will be placed at that point in time at that price, which will be valid for 3 hours. Here we have done this order validity thing we have defined, and let me check it once. Yes, there is 3, and the OV is of 3.6 million. So we have done this calculation which we will need to put in the pending open block. Here we will need to do the type conversion. That's why we haven't defined the result of the calculation just yet. So now is the time to look at the candle closing levels of 10 seconds and compare it to the last hourly close. And here that's what we are going to do. So we need the candle 27th close to have been less than the candle 25th close, and then candle 26th close to be higher than the candle 25th close. So that will mean that the price is starting to rise above the last hour's candle close, and that's where our algorithm will be placing the new order. So here we go, we take candle 27's closing value. For that we are going to need to take into account candle 27's close, and we need to compare it to candle 25's close, and here we go. Oops. Okay, and we also need candle 26 close to be greater than candle 25 close. So again we need candle 25 close to be compared with candle 26 close. So here it comes. Now candle 26 close and candle 25 close needs to be compared, and it should be greater, whereas candle 27 close was less. And this is the last condition for our buy side. So now we are bringing in the order block, the pending open, and this is going to be a limit order. We will be placing a buy limit. So here it comes, and then buy limit, and it should be less, and the entry price would be the calculation we have done here, and here we don't need to do the type conversion. This is double parameter, this is also double, so we straight away we can use this value. Now we got the entry price for the buy side. Trade amount will be defined at hard coded it to 1.0 million, 0.1 million, sorry. Slippage euro USD 2 pips is good enough. Stop loss, as I had said, we will be defining fixed pips here for this particular setup. Mostly we do define stop loss and target utilizing the dynamics ATR, but today we will simply take, take a fixed ratio. And now good till time, order validity, and for order validity time we need to create a fresh variable of long type. So we make it OVT and we put it as the result of this earlier calculation. Last tick time added with 3.6 million ticks multiplied by 3, that is for 3 hours. So we have done all this calculation. Now is the time to take these blocks where they belong. So let us now take this, then we are free to start working on the sales side. So here here we have done this defining of parameters for the buy side. Now we have to start working with the parameters for the sell side, and as I said, we need to do the calculations afresh for the sell side. So we bring in 3 calculation expressions, and then we can start working on the sell side. Now again we will need to go back on chart to see where the sell point should be. We will also need to direct the flow. So here we start working on the sell side. Most probably we will be able to finish the calculation requirement in 3 blocks. So we have connected the flow. In case we need to revise this, we can always do that. Now let me explain to you the sell entry point on the chart. Suppose the TRIX requirement and the LRA requirement are in place, then we need the sell trade to happen when the price starts to fall below the last hour's candle close, and it should be placed for a order which will be the difference between the last tick price and the maximum of last 6 hours, and then we will take the 50% of that difference and then we will add it to the last tick price, so it will be a sell limit order. For the buy trade we were deducting from the last tick price, now we are adding to the last tick price, so that is the difference here. So we will need to do the calculations afresh. First thing we will need is the maximum price of the high side of last 6 hours, then we will need to deduct the last tick price from that value. So we now look for the maxima of the high price ask side. This is it. So we take maximum 20 and we deduct maximum 20 and we will be deducting the last tick price from that. Ding, ding. And from maxima we will be deducting the last tick ask and the difference, whatever is the difference, a1 minus a2, it will be sell difference okay, and then we will multiply this sell difference by 0.5 to get the magnitude halved. So we take this and then we multiply it with the execution difference ED. So here comes the ED. Yes, and it will be A1 into A2, and this calculation will be sell difference requirement SDR. And now this difference, half the difference between maximum and last tick, needs to be added to the last tick. So we again take the last tick ask, last tick ask, and we add the SDR, and it will be a1 plus a2, and the result of the calculation will be sell execution price as C. So here we have defined these parameters for our sale trades, Now we will need to define these conditions for the execution of the failed trade, but I'm not really sure if we will able to finish that. So instead of getting the half setup done in today's session and the latter half in today's tomorrow's session, we will complete the whole setup in tomorrow's session. So for the day, I will be signing off now. We will be back tomorrow, and then in almost all the probability, we will be finishing this setup tomorrow. Have a fabulous day ahead. See you tomorrow. Goodbye.